Happy new month, everyone, and welcome back to our weekend series dedicated to price action-based technical analysis. In this episode, we will be dissecting the GBPUSD market structure as the pound sterling continues its rebound amidst a weaker US dollar. Our previous trading setup offered fantastic opportunities as we capitalized on the bullish momentum, securing over 450 pips from multiple buy entries as price action climbed and settled above the 1.2600 zone. And in fact, congratulations to all of you who joined in on this profitable journey. If you in any way missed out on these commentaries and wish to catch up for educational purposes, you can find the link in the description box below or at the top right hand corner of your screen if you are watching on my YouTube channel. Following the Fed chair's dovish comment on Friday, the decline in US Treasury bond yields and the US dollar provides a backdrop for pound sterling strength at this point in time. However, the absence of significant economic features from the United Kingdom may also present an opportunity for the US dollar to gain traction given the handful of impactful events lined up on the US economic calendar for next week. Now, the question is, how do we position ourselves amidst this recent situation we have here? Stay with me as we unravel the potential trajectory of price action for the upcoming week, utilizing fundamental tools such as trend lines, key levels, and chart patterns. Before we proceed, it is very important for me to note that this video is for educational purposes only and should not be considered financial advice. My aim is to provide insight into the GBPUSD chart, enhancing your understanding of price action analysis. Remember, Forex trading carries inherent risk, so always exercise caution and consider consulting a professional financial advisor before making any investment decisions. Without further ado, let's delve into the business. As we shift to the daily time frame, the structural analysis from last week's trading setup remains largely unchanged, with a minor adjustment to our key level, which is now represented around the 1.27100 zone in response to recent price action development. Now, over the past 6 months, this zone here has consistently influenced price dynamics, underscoring its significance in the upcoming week. Now, if you look at what has been going on here since the month of June, you will see how price action had reacted to this level. At some point, it broke out the structure. We saw a little bit of consolidation phase here before price broke to the downside. And since price broke out the structure in the month of July, we saw how that level was serving as a buying niche for some time, as you will see here, before price action finally broke down that structure in the month of August. And since the breakdown happened in the month of August, you will see how this level had remained a selling niche in this market. And in fact, if you fast forward to recent times, that is last week's trading session, you will see how that same level still was serving as a selling niche as buyers found it difficult to break through that structure. Now, at this point, you would agree with me that we are at a crucial juncture in this market as the market's participants' response to this level at the beginning of the new week will be crucial in determining our strategic positioning for the next move. Now, in order to capitalize on the next move, I've been able to identify a simple setup on the 4 hours time frame, which we will be using to guide our independent trading decisions. But before we go into the details on the 4 hours time frame, it's very important that we keep tabs with the fundamental factors that will be driving the market sentiment for this upcoming week. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after these economic events. Now, based on the asset we're looking at, we are going to be focusing on impactful events from both the United States and the United Kingdom. And since for the coming week, the economic calendar for the UK is absent of high impactful events, so we will be focusing on the United States economic docket for this week. Now, the first impactful event is coming in on Tuesday, that's December 5, and this is the ISM Services PMI, a key economic indicator that measures the performance and expectations of the service sector in the United States. Then on Wednesday, December 6th, we have the ADP employment change, which is a monthly economic report that provides an estimate of the change in non-farm private employment in the United States. Now, fast forward to Friday, December 8th, we look forward to two key labor data from the United States, one of which is the average hourly earnings, which represent the average amount of hand per hour by private sector's employees in the United States. Then simultaneously, we will be witnessing the publication of the non-farm payroll, which is another key economic indicator that measures the total number of paid U.S. workers, excluding farm, government, and non-profit organizations' employees. Now, lastly, for the week is the survey from the University of Michigan, which summarizes the consumer sentiment index, and this is also another data that measures the level of confidence that the U.S. consumers have in the overall state of the U.S. economy. Now, with this impactful event lined up for next week, as technical traders, we do know that the anticipation of this event will be reflected on the chart as price action. Now, talking about price action, let's dive right into the 4 hours time frame, where I was able to identify a simple setup that will be guiding our trading decisions for this week. Now, the first thing I did here was to take into consideration the nature of price action since the beginning of the month of November. And in that regard, you will see here how buyers had continued to maintain the momentum, and as a result of this, you will see our price action transitioned into an ascending channel to work with. Now, after connecting the series of higher lows here, we have the support line of the ascending channel, though we had a little bit of a breakdown here and price action climbed back. And since price climbed back, we saw how buyers maintain that momentum. Then when we also connected the series of higher highs, we have the resistance line of that ascending channel. Now, with this information here, you know that when price remains within the ascending channel, we shall continue to look out for buying opportunities. Now, in addition to the ascending channel are a couple of levels here. Remember the key level we identified on the higher time frame, very much intact, around the 1.27100 area, which was exactly the point where price action closed for last week's trading session. Now, you will see that during the second half of last week's trading session, price action was confined within a range that is between the 1.27100 level and the 1.26200 area to emphasize the level of indecision going on in this particular market. And of course, you know how we use our flat range in this community, especially when we identify them on the chart. We want to exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. And in fact, if price breaks down the support line here, it would also have broken down the support line of the ascending channel to emphasize that we are about to witness a momentum shift. So going into this week's trading session, we are going to be focusing on that zone around the 1.27100 area and the 1.262, where depending on the direction of the breakout will give us an insight into where price is likely going for the next week. Now, let's see how the market will react to the 1.27100 area during the early hours of the new week, as this will give us an insight into what is likely going to be happening, at least for the first half of the week. I will be pausing the video here, but trust me, at the beginning of the week, I will be with you in the comment sections to give you updates after monitoring how participant in the market reacts to our key level at the 1.27100 level for our next line of action. If you have found this content helpful and useful in making your independent trading decision for the upcoming week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and of course receive notifications whenever I upload new videos. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.